If somebody trusts me with their capital, then I'm going to work twice as hard to make sure that they're getting their return. But I also think it builds a lot of credibility to them that we've done it with our own money. And I'm not afraid to put it out there. We still invest a big chunk of our own money in all of our deals. And I think, again, that's something that we take pride in, is the fact that we're not afraid to invest in deals. And if I believe in a deal, and I believe in all the deals we buy.
This is episode number 11 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
And Julian Sage.
and welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, deal makers? Julian Sage here. And in this episode, I have the special honor of speaking with John Barker, founder of 180 Multifamily Properties, a multifamily investment fund focused in the Dallas-Fort Worth market. John has acquired over 1,800 doors and $175 million of assets under management. In this episode, John shares his journey of starting out as a broker in 2001 and then eventually starting his own investment group in 2009 amidst the recession. John shares his unique strategy of how he's been able to grow his portfolio without using outside capital and how he's been essentially able to BRRRR his portfolio to now over $175 million. For those of you that maybe don't know, BRRRR is the process of buy, rehab, rent, refinance, and then repeat. This is essentially what John has been able to do with his portfolio, and he's been able to grow this exponentially. If you like my show notes for this episode, go to multifsuccess.com/EP11, or if you like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, deal makers, to another episode of Multifamily Success Stories. In this episode, we have the special honor of speaking with John Barker. John, would you please introduce yourself to the deal maker community and let them know who you are and what inspired you to get into multifamily investing?
Okay. Well, good afternoon. Thank you for having me on the show. It's a great pleasure. My name is John Barker. As you mentioned, I'm founding principal of 180 Multifamily Properties. We're based in Dallas-Fort Worth area. We own and operate multifamily properties throughout Dallas-Fort Worth, Texas, and Oklahoma. I've been in multifamily business for 20 years, which we just discussed. It's hard to believe it's gone by that fast, but it's been a great ride. How I got into it, I think it's just sheer luck. Candor. I have a degree in criminal justice and law and planned on going into that field. And after moving to Texas, somehow stumbled into commercial real estate as a broker. And that's how we started. And it's how I started in 2000 and worked as a broker and started investing in the early 2000s with some smaller assets, some duplexes, and worked our way up and had my first large purchase in 2006 with a 305 unit deal. And we just grown from there. I started 180 Multifamily Properties in 2009 with my partner Lance, and we've just actively been trying to buy. I guess you would say initially we're buying more hardcore value add. We still have that niche. We're also trying to buy more of the core plus now, the A's, the B's, good locations. We really want to be 200 units and greater, which we're fortunate to be able to say that. And I guess that's it in a nutshell.
Awesome. You mind taking us back to, that when you first got into real estate, you said you had a degree in, was it criminal justice, you said?
Criminal justice and law, that's correct.
And how does someone that is studying criminal justice end up, brokering deals and, how does that happen?
Again, I think it's just sheer luck. Now, after I came to Texas actually to go into law, and I took some time to myself and realized that I wanted to just explore the world. So I was out job hunting and came across this ad for a commercial real estate where you can make X amount of dollars. And I'm a kid from Kansas who could never fathom that kind of money. And I never really thought it was true. So I became a broker And that first year, I fell right on my face, didn't make hardly anything. I think I made like $13,000 my first year in the business. And, I don't even think I could pay my rent. But with perseverance, seeing the big picture, understanding the potential and the fact that there was no glass ceiling, I stuck with it. And it's been very good. As a broker, it was a great career, and it really enabled me to be in a position where I'm at today, where I was able to start acquiring assets and growing a portfolio to where we're at today.
What was the big pivot for you though? Because you were going to college, you had this degree. Did you just not see that there was that the job that you were going to school for and paid all this money for?
I think ultimately it came down to the entrepreneur spirit. When you're in commercial real estate, again, as I mentioned earlier, there is no glass ceiling. I've never been very good to be one that work for somebody else. And I think with commercial real estate as an investor, even as a broker, you have that potential to make of it what you want. The harder you work, the more comes of it. And for me, I found that to be exciting. I went into a position with no salary, no benefits, nothing that I was ever raised to go do. And yes, it was a bit scary, but I liked that challenge. And so for me personally, just the way I'm built, I think that was a driving factor. If I could overcome this and make something of it, and rest assured, it was challenging. I got in the business, I had a full head of hair. Now you can see that is long gone. But be that as it may, I think that was probably one of the primary factors, is just the fact that, I basically had my own potential to live up to, and that's what I wanted to do.
Can you walk through that first year of you brokering in real estate? You said you made around 13,000. I mean, what kept you going from that? I mean, if you're barely able to pay for rent and food, what kept you going?
It's funny you asked that question, because I think probably in that first year, I probably told myself a dozen times or more, why am I in this? Why am I doing this? This is crazy. I should be doing something where I'm getting a check. I've got some benefits. I'm not worried about, it's funny because in the office I worked at the time on Fridays, the manager would bring in food, lunches. And I would literally, stuff my pockets full of extra food for the weekend. That way I could make it through. It's so bad to say that, but that's what I had to do, just because it was what I had to do. So what kept me going, I think, was, again, I saw the potential. I saw other people in the business, and I was learning so much that first year that I knew I could be at that level, if not better. And so it drove me. Competition drives me. I liked that competitive environment that I was in. And, I think that was a big part of it. And honestly, I love the business. It's a fun business. It's a lot of fun people meet, going out there, doing deals. It's exciting. And so when you get that first listing, when you get that first sale, I think that there's just that energy you get that maybe a lot of times, at least for me, in other aspects, I didn't see. And so I think it was energetic and just like fun.
What was some of the first, or what were some of those lessons that you learned when you first got that job? And is that something that is readily available to people today, to just go in and start brokering deals, or did you have to start off, running the coffee or doing something, for the people that were brokering the deals?
Great question. I think the business has evolved a lot since I got in the business 20 years ago. I don't know if it's necessarily the same process than when I got in, but that doesn't mean, anybody can go get it, do a job. Anybody can go and apply to any major brokerage, small brokerage, whatever you want, or even go get your own brokerage license and do it that way. I think if it's something that somebody has a passion for, then absolutely. But I got to tell you, it's not easy work. Going into that business, commercial real estate, it is highly competitive, and you're going to have to put your dues in. Fortunately, now the way the business has evolved is you have teams, and the way the companies are set up, it really enables the new people in the business to grow a little faster than maybe I did. Technology's made a huge impact, obviously, in the business over the last 20 years. So a lot of factors have made it a much more conducive and successful business environment than when I first started. So that's good for somebody new coming into the business.
And how long were you at that position for?
Gosh, great question. I think I did about 13 years.
Wow. So what kept you in the broker route? Because obviously being a broker is quite different than what you're doing, is pretty different than what you're doing now, correct?
It is. It is. And I loved it. It was a lot of fun. And again, I think it was, I liked the art of the deal, going out and establishing a relationship, building a relationship, getting the deal, selling the deals. The client's satisfied, they're happy, the buyer's happy, the seller's happy. And ultimately, we get paid obviously at the end of the day, but it's just that satisfaction of putting a deal from A to Z as a broker. It also puts you in a position that if you're um, smart with your money, you put some aside, you start investing. You learn a lot from that business as a broker. I don't think it's as easy to get into my position without some sort of real estate experience. I'm not saying it can't be done. I just say I think it gave me an advantage when I decided to become a full-time principal. So I did that for a long time. It's hard to leave because it is such a great business. I had a lot of great relationships, but ultimately, I think my drive shifted, if you will, from a deal junkie or whatever you want to call it, to more going out and searching and buying deals and growing a portfolio.
What are some of the biggest differences between what you were doing as a broker to what you're doing now as a principal?
Well, first of all, I don't have to wear a suit anymore. So I wear flip flops and a polo shirt every day. In all reality, and to be clear, what are some of the biggest differences? I think for me, probably the largest difference is, as a broker, you're constantly working to ensure that your clients' best interest are always looked out for. And in my position now, it's still the same, but I don't really have clients anymore. We do have some investors, friends, family, stuff like that, but we're not. So I would say that I guess that role has shifted to where my objective is always to make sure that the client's deal is sold, versus now my objective is making sure we find the right deals, we're getting the best returns, and really focusing on the betterment of the company, growing the property, the portfolio, and maximizing our returns.
So you've been in real estate now for well over 20 years. And I've seen some of the shifts in the market. What was that like going into real estate in 2000, and then immediately after that, having the .com bubble, and then not too long after that, also seeing the last Great Recession. So what kept you in it during those times, and not push you back to just getting a W-2 job?
Great question. And I think, again, it goes back to that initial comment I made about perseverance and just wanting it more than the next person. And also loving the business. I mean, again, I've said it before, it's just something I really enjoy. I mean, it's one of those things, by Sunday evening, I'm ready to get back to work. That's just it. I'm not dreading that, oh, it's Monday, not most people is like, oh, can't wait for Friday. I just love what I do. It's a fun business. You're always around good people. And so during those downturns, as a matter of fact, right after I started, obviously I've been there for about a year, and I've been in the business about a year. We had 9/11. So that was obviously a huge impact to the country. The .com, obviously, 9, 8, 9, 10 when the market crashed. These are all significant, impacts on the market. And so you have to always look at the silver lining. Yes, it's a down market, but how can we, as brokers, different now as an owner, as a broker, let me just say that first, how can we help our clients make the most of this market? As an owner, when you go to downturns, you're like, okay, well, how do we persevere? How do we get through this? How do we still grow a portfolio? How do we find the best opportunities? And in all reality, sometimes some of the best opportunities are in down markets, especially from the investor side that I'm in now. And so we never want to see a crash, but an occasional correction is not such a bad thing.
What were some of those lessons that you learned? I mean, you being behind the table and helping those principals do the deals during those market turns. Did you learn anything seeing other people going through to where now we're in a position where you're the principal and you're looking at these market corrections? What are some of those things that you learned seeing other people go through it?
Well, I mean, I think that there's a lot of different ways to answer that question. I'm going to be careful how I say this. I mean, at the end of the day, is in the position that I was in, doing so many deals and meeting all these clients, you saw a lot of people, investors, come in the market and out of the market quickly, over leverage, overpay, mismanagement. I mean, there's just an array of different things that people have done wrong. There's also an array of things that people did really right. And so you want to model yourself after the people that have been successful through those downturns. And so I think, again, as I mentioned earlier, the thing that I really took away from brokerage is learning the ins and out of the ownership side by having relationships, building long-term partnerships, if you will, with these people, learning how they did it the right way. And so what I've taken away, since I've been full-time on the principal side, is the one thing I remember is, as a broker, is you have those people you work with that you want to be like, and the other ones that you saw, you're like, wow, those are some mistakes that I'm going to try and avoid. Not that they did them intentionally, but a lot of people just didn't know, and you don't know the market. And sometimes, like in '09, the market just crashed, and there was not a whole heck of a lot that a lot of people could do. It was just a bad situation. But we try and be overly cautious when we get a new investment. I think that will help us in the event the market turns, and buying the right and having the right staff and making sure that we operate in a fashion that will help us get through those kind of times.
Very nice. So talk to me about your first deal, the very first property that you got.
Wow, this is interesting. So I bought, matter of fact, in Dallas, I bought two duplexes a couple years after I got in the business, thinking, well, I can manage these myself and piece of cake. And needless to say, it was neither of those things. I spent more time dealing with that because there's only two duplexes that couldn't justify having a manager on site. And it wasn't as easy as I thought it had to be, because I spent so much time in my career as a broker. I didn't really have the time to dedicate, even though it's only 4 units. And I overpaid, candidly. Again, mistakes, but you learn from. I sold them a couple years later, and I probably broke even. But a couple of things that I took away from that was, I have to be able to dedicate more time. I think there's a great opportunity to do duplexes. I think that somebody's buying it for the first time, buy one, live on one side, rent out the other. That way, they're helping pay the mortgage. Little things like that. And then we evolved into some larger assets, and so we've gone from there.
So did you immediately go from that duplex to a big multi-door unit?
I did, in a partnership. So in 2006, we bought a 300-unit deal in a partnership with some people that I've worked with in the past. And there was a group of us, and it was a deal that was highly distressed in a very undesirable part of town. Would I do it again? Probably not. Again, it's the lessons learned throughout this process. But it was a good opportunity. We purchased it right. It took a lot of work, but we got it turned around, and the property's done very, very well for us. What I realize is economies of scale. If you have the ability to partner up or buy deals on your own, have larger deals, I definitely recommend that. Obviously, it does take time to get to that level. But economies of scale, the bigger the deal, it really is considerably easier when you have your staff on site, a manager, maintenance people, the whole 9 yards.
Sounds like you still have that asset today. Is that correct?
That's correct.
What class level would you say that it is?
That one's a C deal.
Okay.
That one was a C deal. So initially, the stuff that we purchased was C deals. And so then that was 06, 09 is when I started 180. And we purchased some C deals. And obviously that was in '09. The marketed tanked, and so we saw some buying opportunities. Came in, started buying about an 84-unit deal in Arlington, and a 109-unit deal, and some little stuff here and there, which we're able to benefit again, because of the market, and turn those deals around. These are deals that were C deals, mismanaged, underutilized, and so we went in there, basically renovated, repurposed, and now so there's some of the nicest properties in the area.
What was your thought process during that time? I mean, starting 180 apartment, right in the midst of the downturn, do you feel like you were these properties, it was like catching a falling knife, or did you look at this as like a prime opportunity to, start this business?
Probably both. Okay, so in all reality, when buying these deals in '09, we knew that there was tremendous opportunity. What we didn't know was the challenge that was in front of us. Um, I think that we bit off more than we could chew. Again, lessons we've learned um, with these assets, but at the end of the day, we were able to stabilize them, basically re-tenant them, repurpose them, make them nice assets, desirable assets in good locations, and ultimately they've, some of them we sold, some of them we kept, and they've all done very, very well for us. And that's put us in a position where we'll buy bigger deals and bigger deals, and just kind of like a snowball effect.
What was your reasoning for starting it like right then? I mean, a lot of people when they, when things are going a little haywire, that they might kind of step back and say like, hey, kind of like deers in a headlight. What made you say like, hey, this is my time to, start doing something a little bit bigger?
Well, as I mentioned earlier, I really wanted to transition from the brokerage into the investment side. In '09 was a slower year, the down year. I wouldn't say slower year, it was that a down year. So on a brokerage side, it was a little bit not as hectic. There's a one made deals transacting. I still wanted to buy. I mean, I still was buying, and I wanted to grow. And I saw some opportunities out there, as I mentioned, like the deals we bought in Arlington, right at first. And so that's when we started. It wasn't because, the market's, at the bottom. It was just these opportunities popped up. Let's start this company. We got 180 Multifamily Properties. We have 180 Multifamily Management, which manages all of our assets. And again, just jumping in head first and see what happens. And it's worked out okay.
What were some of the roadblocks that you faced with those first deals that you had? Did you feel that because of your experience, being a partner on another deal and having that broker experience for so long, that it was just like an easy transition for you, or did you also still face some obstacles?
There's always going to be obstacles. I mean, that's 20 years and buying deals today. Buying newer, nicer deals are still obstacles. So inevitably, there's always going to be some sort of challenge. Maybe not the degree it was 10, 11, 15 years ago buying these other deals. I think that when we bought these deals initially, I think we thought that the process to turn these properties and to re-tenant them and to make them highly cash flowing would have been a little bit more compressed than it was. The time frame took a little longer. It wasn't a 6-month turn; it was a 2-year turn. Some of these properties were a little bit more distressed than we anticipated, so we had to completely empty them out, renovate them, and start all over. But that's okay. It's paid off in the end. At that time, I didn't have any kids yet, so I had extra time. Now I've got 3 of them, so not to, but anyway, so I think just having that ability to get that done. But I think that was really the biggest thing was the fact that we anticipated a time frame to get these turned around to considerably longer.
Did you still have your broker job during that time that you started 180?
I did.
Or
Yeah, I did, because I knew initially we wouldn't have the cash flow needed to supplement the properties, and so I had to do that at that time.
and how'd you go about forming your team? Was it because of your pre-existing relationships? You were kind of like easy to jump off and start right away?
Yeah, I mean, the partner I bought my deal with, and the initial deal in Arlington with, yeah, it was an old friend of mine that we worked some deals with in the past. And then as far as the on-site management, just people we hired, maintenance staff, all that good stuff.
All right. So what was kind of the next that next step? What was your growth during this time, and what was the next big pivot for you? Next big move during this?
From 9 to, trying to think, 13, 14, we were doing so much of little stuff, and I don't mean little stuff. I mean, I guess it sounds kind of bad saying that. We were doing, assets from 75 to 150 units, buying and managing primarily in the mid-cities area. We had an opportunity to sell, and so we did that. And we do everything internally, so basically we're vertically integrated. So anything from acquisitions to management, everything we keep in the 180 circle. So it makes it a little bit, slower to grow because we don't outsource a lot, but it does help us keep our expenses in check and our yields where they need to be. So at that time, and then in about, I'm trying to think, about 13, 14, 15, I'm trying to think, about 14 is when I left brokerage fully, and it was about that times when we started looking at selling some of these assets. Um, Took some of the assets that we bought in '09, this and that. Um, the market was starting to come back up in full swing. We saw the opportunity, sold a couple of them, and then we really transitioned into some larger assets I bought. There was actually a 262 unit deal in the same neighborhood as the ones we'd owned, right across the street from the Dallas Cowboys Stadium. I mean, it's a prime time location. Just so happened the deal was in probate. It was a family that was fighting over the state, and so I went to the court, made a proposal, made our offer. Ultimately, it was us and a couple other groups, and we got the deal. And that kind of catapulted us up from the 100 unit to the 250 plus, and then it's just kind of gone from there. And that was again another deal. It was a C deal that we went and did a pretty heavy reno, and it's turned out very, very well for us. And so that's kind of the story on that.
What was it like raising capital for when you first started 180 to that period to where you were jumping up to around that 200? Was it a very big difference, or did you feel like that was something that was an easy transition?
We're probably a little bit different in that aspect than probably a lot of guys and a lot of investors, and we probably did it the harder way than than most people, because when we bought this first deal, it was all of our own money. We didn't raise money. It was my partner and I. We came in, we scraped together every penny we had and bought that deal. We stabilized it, refinanced it, took the equity from that deal, rolled the next deal, and just kind of did that over and over again. And then when we bought that 262 unit deal, a large deal, we had sold the deal, did 1031 exchange. My best friend invested, his dad invested. It was just a friends and family. And then so we did that again. We bought a 152 unit deal with money that we had earned, that we had gained in equity, and refinanced and rolled another deal. And then at that point, we had, 800 to 1,000 units with money with equity of our own equity. And all of a sudden, I'm getting calls from different groups going, "Wow, we see what you're doing out there. You guys are really doing well as far as operations, your renovations. I want to know." And so I had that equity groups actually reaching out to us. And I never really thought about that much. And then I partnered up with a family office in the Dallas-Fort Worth office, and we've done several deals together. But traditionally, we're not out there seeking equity. It's not that we don't want it. We'll take it, and we'll definitely give a big return. But this just wasn't our model. And so fortunately, we did partner up with a group that we've worked with in partnership on, like I said before, a family office that has come in with a big chunk of the equity in the last few deals, and they've gotten tremendous returns. And so it's been a win-win. But fortunately, I think what happened for us was just, as I mentioned, we kind of built it on our own, the first half of our portfolio. And I think that gave us a lot of leverage to, whenever we did start working with outside equity, to say, "Listen, we've done this already." And I think that's been a big benefit. And that's why the last year and a half, 2 years, we've doubled in size, almost even more so.
Do you think that risking your own money kind of just helped you make sure that the deal was going to be successful?
When you think so? Well, the reality is I think that answers, whether it's my money or somebody else's money on the deal, we want to make sure that it's protected at all costs, and we want to be conservative on the way we buy deals. I actually would feel worse not losing, but maybe not getting the return that they expected from a different investor than my own, because it's mine. If somebody trusts me with their capital, then I'm going to work twice as hard to make sure that they're getting their return. But I also think it builds a lot of credibility to them that we've done it with our own money. And I'm not afraid to put it out there. We still invest a big chunk of our own money in all of our deals. And I think, again, that's something that we take pride in, is the fact that we're not afraid to invest in deals. And if I believe in a deal, and I believe in all the deals we buy, and I pass on more deals than I probably should, but I do that for a reason, because, again, we want to protect not only our own equity, but our investors' equity.
What's the mindset behind using your own capital, or just like friends and family versus finding outside capital and trying to scale a little bit more rapidly?
I'm not opposed to working with outside capitals. Again, as I mentioned, we're working with a family office now. We've got a great partnership with, so that's enabled us to go out there and do more deals at a larger scale. But again, I think really for us, and again, everybody has their own thing, and all models are fine. Um, we like to do everything internally. We have a certain way we like to manage, and for us, it's got to be the right partnership. We can't just take somebody's equity or work with an equity group just because we want to buy a deal. That's just not our thought process. It has to be a good partnership. It has to make sense. It has to be a win-win for both sides. I'm not desperate for their money just to buy that deal. If it doesn't make sense, then I'm just not going to do it. So with that being said, as we grew, and as mentioned earlier, we had equity groups invest come to us. We almost had to interview them as much as they interviewed us, because you got to be careful who you get in a partnerships with, and we don't want to risk our own money and our own reputation because of a partner that may not be the best partner for us.
And you're saying family office. Can you explain what a family office is for those that maybe don't know?
Sure, sure. A family office is they basically, I work hand in hand with the people that run that family office, and then they have a group of investors they work with, and they raise the equity. So let's say we buy a deal that requires $10 million. Okay, so they bring in 7 million of that. That's hypothetically speaking. Uh, all I'm dealing with is that person's family office. They're dealing with all their investors. So I don't have 60, 70, 50 investors, whatever. They've got their 5, 10, 12 people, whatever they have as far as investors. They manage the investors, but they raise the equity. And that takes a link out of the chain for us. It makes it easier. And so that's I guess you would say the easiest way to find out, I guess. Hope I did a good enough job.
So what I guess what is the big difference between working with a family office versus a lot of people that we talk to on the show? They're going out, they're going to a bunch of networking events, meetups, they're talking, trying to pitch a lot of people. What's the big difference between the way that you've been raising capital versus what other people raise?
I think to each his own. I think for us, we're so focused on, and I understand that model, the syndication model. It's a great model, and I think that people have done very, very well with it. I just think for us, it's a little bit different because, again, we do everything internally, we're vertically integrated, and I'm so involved on the day to day. I just don't know if we could spread ourselves. I think we would spread ourselves too thin, trying to work all these investors, and making sure that they're all getting their monthly, letters and updates and this and that. I'd rather just have, a handful of my friends and family plus the family office. I send to them their reports, and then that report to the investors. I think it's a great model, the syndication model with all the investors. I just don't think that we could optimize our returns if I'm constantly out doing that. I guess if we were a third party manage our assets, it would free up a lot of time, but we just don't. We want to do everything in house. That's just how we do it.
So would you be classified more as like a fund model?
Yes.
Okay. And was that something that you originally thought about, that you thought that you would kind of fall into? Because a lot of people, when they get into multifamily investing, they just think, syndication, got to raise capital, but you decided to do something completely different. Was that more organic just because of you using your own equity and not needing to raise capital?
No, I think we just fell into it because, again, we were using our own equity, and then the family office that we ended up partnering up with is actually somebody that I've known for 20 years in the business, or not 15 years in the business at that time. And we'd done deals in the past when I was a broker. There was already a relationship started because this person was originally a owner operator, and they eventually transitioned into a family office to raise his equity funds, if you will. And so it was just kind of, the links came together, again, going back to the relationships of this business.
What do you see as being your biggest failure up to this point in your career?
My biggest failure. Well, that's a long list. I think wow. I don't know if I necessarily will define anything as a failure. I mean, I've failed plenty of times, and we always come back and do it a little bit harder and do it the right way. I got to tell you, I think probably how we handled some of the assets initially, we probably could have done it more efficiently. We probably could have done it better, but again, it's all a work in process. It's always revolving or moving, and so I think just always improving on what we've done. It's not about what we did yesterday; it's about how we do it today, tomorrow, and the day after that, and always improving upon that. And that's something that we focus on: is constantly improving what we've done and make sure it's better, as we move forward.
For you said how you manage those original properties. Do you think that do you think that you could have been partnering with that family office when things weren't, as clean and tidy as like when you first started, or do you feel that you really had to be refined in your processes before that you could start partnering with outside
I
capital?
think had I been more knowledgeable, more educated, I think early on in my career on the investment side, when starting 180, it would have behooved us and benefited had we gone out and raised equity versus trying to do it all ourselves. I think we probably would have grown faster. I think we probably had more success, probably had less headaches in all candor, because that way, instead of trying to piecemeal a renovation, we could have raised that capital on the front end, done the deal, bang, bang, boom, kind of like what we do now. It's very systematic now. Back then, it wasn't systematic. So the answer to your question is, would we have been more successful working with equity partners back then? Absolutely. Because I think the financial side would have been not as stressful.
From the equity partner standpoint, are people willing to trust someone that maybe doesn't have that? You've got plenty of experience, but for people that are, going out there trying to raise capital because they feel that capital is kind of what is preventing them from growing, do you think that that's okay that you don't have everything worked out when you do start?
Well, we got to start somewhere, I think that obviously you need to have a good business plan, and you have to be able to follow through on your promises and make sure that you're providing. And you have to make sure if you're just getting into the game, obviously reach out to as many people as you can to take in as much knowledge as possible. Learn from people that made their mistakes. That's why I think this podcast is great, because hopefully they realize a lot of mistakes I made were something hopefully they don't make. But yes, I think that if you have a good solid business plan, you find a deal and you have the returns, and absolutely, I think you can do that. But it is going to be more challenging right off the bat. Don't get me wrong. It's not like the first time was a come in and raise 10 million in the first week. It's just not going to happen. I guess it could happen, but
How do you go about finding? Obviously, you said that you had that pre-existing relationship with that family office, but how does one even go about finding a family office and being able to partner with them?
well, I think locating family offices is probably not that hard. You probably find that on just get on the internet and Google. And then, of course, you can reach out to title companies. They probably have people they know, lenders, whatever the case may be. Obviously, all the social media and LinkedIn. I mean, there's all kinds of resources to find them. Building relationships is obviously up to the general partner, or sponsor, or whatever. And again, I think that on a family office, and again, I can't speak for all family offices, they're probably going to want some sort of experience right off the bat. I think initially, as we get into the deal, they're probably going to have a better look on the syndication route, or coming in as a co-GP, or having somebody they partner with that has experience versus trying to do it themselves. I know that there's some programs out there where they have, basically a mentor mentee kind of on the first deal. And then after they do that first deal and they get that Fannie Freddie experience or agency experience, then they can roll into their own deal. But I think family offices, for the most part, are going to want to see some experience. Matter of fact, I did a call the other day, and almost all the family offices that we spoke with on that call, want 6, 8, 10, 20 deals, depending on the size, the volume of equity the GP investor is looking for. We're just fortunate because at that time we already had the deals we purchased ourselves and had the relationship. It was just good timing.
What do you see that a lot of people that are getting into the space doing? What would you advise the people that are planning on getting into multifamily investing now? What are some of the common mistakes that you see?
Okay, so and there's a lot of mistakes, and rest assured, I've made my fair share. Number one, don't buy a deal just to buy a deal. Okay. Just because you want to get that first deal, you're so excited. Don't overpay for it. Don't get crazy loan terms. Don't ever leverage. Make sure you get plenty of equity. Make sure you have plenty of reserve. Um, and another thing that I've seen over and over again is you have an investor that maybe um, thinks that it's mailbox money. Well, multifamily is not. You have to be involved. You can't sit at home and expect that check. It's not a Walgreens. It's not a triple net deal. You really have to be involved. And unfortunately, over the years, we see a lot of investors that have not done well and lost properties or had to sell them at a discount because they're too busy with their careers. They're not too busy, but they're busy with their careers and not have enough time to do this. Be conscious of what you're buying. It's not as simple as just bing, bang, boom, send me in money. So you really have to understand that there's going to be a lot of time and effort that goes into buying multifamily. You're talking about multiple units, multiple problems, ACs, roofs. I mean, there's just so many different factors to take into consideration. So as somebody new coming in, A, be patient, find that right deal, make sure it feels right. And B, make sure you take the time to understand it and to be in there and be involved.
Speaking of the right deal, somebody that's going out and trying to find their first deal, is there a sweet spot on the number of units they should go out and look for? Should it just be a duplex? Should it be a 10 unit, or should they go big or go home?
Great question. Actually, I spoke at a conference about a year ago prior to all this, COVID stuff, and somebody asked me that question. I think the response was, "Well, don't go out and try and buy $100 million deal on your first try." But I think the reality is, I think you can buy whatever size deal you want to, as long as you think you have the capabilities to raise the capital. If you think you can buy a 200 unit deal, more power to you. Have at it, but make sure you can follow through, because if you go through into that process, you don't close on that deal, you lose credibility with that seller, that broker, the lender, your investors that maybe you did get some money from. Let's say you needed to raise $2 million, you only raised $1 million, then all of a sudden you have to give the money back, the deal falls apart. Well, next time around, guess what? They're not going to be so quick to invest with you. So make sure whatever size, whether it's a duplex, 10 unit, 100 unit, that you can follow through. I think that's key. Know your limits. And for me personally, for us, we're conservative by nature. I'd rather come in and say, okay, we'll take a little bit smaller and know we can knock it out of the park. That way, next time around, they know that we're going to do the same thing.
Do you ever feel like you've ever bitten off more than you can chew?
Every day. Yes, but I like the challenge. That's just how I'm made. I'd say that in the last 4 or 5 deals we've closed in the last year, there's been certain challenges that have come up. Matter of fact, we just closed a deal in May that we put in a contract pre-COVID, and that posed some pretty big challenges. Do we bite off more we could chew? Probably, but I'm persistent, and I know that we were buying the right deal. I know we had a good seller we were working with. It was just a good overall vibe. We liked the deal. So even through the challenges and the stress, we were able to make a deal happen. It was a win-win for both parties. And so ultimately, sometimes biting off more you can chew can be rewarding at the end, at least in my personal opinion.
Can you give some specifics on some recent things where it's like you're stretching yourself a little bit, losing a few more hairs than you've already lost?
Most recently, I think the easiest thing to identify is, and if you're talking about with regards to buying a deal, is during COVID, the lending criteria changes. We went from having to come in with our down payment, all of our normal ordinary expenses to close, and then all of a sudden they want to put 1 year of principal and interest reserves, on a $25 million loan. That's not a small chunk of change. That's $1 million change, $1.5 million. Plus they wanted 1 year of insurance escrowed, and so this is an additional over $2 million in capital needed that came halfway through the escrow period. That was a huge challenge, and that was a big, something that we had to overcome, and we were able to make it work. But those are the kind of things that pop up. You just don't know.
Do you feel that this business, that there's a lot of sleepless nights, or do you feel that, any obstacle that kind of comes up, it's never going to be really that bad?
I think, in all honesty, when I was probably a broker, I had more sleepless nights than I do now, just because I was working for the client, ensuring that they're. I mean, now um, we buy the deals, we operate right, we do well. I don't really have a whole lot of stress other than wanting to buy more deals. But yeah, there's times that I've had plenty of times where we've had sleepless nights.
And what would you do differently if you had to start from scratch?
I think I think I would taken more time on the front end to really focus on the investing early on in my career versus the brokerage. I think I wish I would have capitalized more on that earlier on in my career versus waiting until a few years later. I think that if we could have been more aggressive in '09 and buying more deals, I think we were conservative by nature. As I mentioned earlier, I think had I had the knowledge of going out and raising capital and talking with groups at that time, which I didn't, probably would have put us in position to grow at a faster rate. But I don't regret anything. And I'm very pleased with 180 and how we've done. And so I think at the end of the day, everything works out for a reason.
What are you doing? Do you see right now as another time that you're going to be? Do you see this as like an opportunity time, or do you see this as a time to step back and kind of wait for things to play out?
So right now we're in a step back phase. Absolutely. I think that we have seen some shifts in the market. Fortunately, we have fared well throughout this epidemic that we're going through. Um, and our occupancies have maintained, our collections have maintained. We've done very well. We were able to close that one deal in COVID, and we were able, like I said, make it a win-win for both parties. It's a great deal, and we're renovating that. We do want to buy more right now, but we're being very cautious. We're seeing some deals out there that I think are the price just doesn't make sense for us. Maybe it does for somebody else. For us, it just doesn't make sense. Again, that conservative nature that we like to take. But I do. So we're a holding pattern unless something really good comes along or comes across my desk. But I do believe that at some point we're going to see another shift in the market, and I think there's some opportunities pop up. I think that 6-9 months from now we're going to see some people that have over leveraged or been unable to manage through this process. Maybe they've had a lot of residents that weren't able to pay rent. And so they're forced to sell. I mean, there's just a lot of different factors that I think are impacting properties now, but we won't see that really for another 3, 6, 9 months. And I could be wrong, but that's just kind of what I'm saying a little bit. We're seeing a little bit of stress out there, but it's just not there yet. And so will there be some opportunities? Well, we'll see. We'd like to see. We'd like to think so.
Do you see this time as pretty different than that 2001 2008 time period?
As far as the downturn, it's completely different. I mean, nobody is prepared for a pandemic. I don't even know if I knew what a pandemic was prior to to this whole experience. Nobody underwrites for that. It's not in the bylaws of multifamily real estate. So is it different? Yes, it's different, but it's also just one of those things you have to just have to deal with, and you have to overcome, and you have to prevail, and work hard, and you have to adjust your business plan based on what you're seeing in the market. So when in March when we saw the entire economy shut down, everything's locked down, um, people weren't working. We knew that, so we gave rental abatements to all of our properties, a certain amount of dollars for people that paid their rent on time. They would get a rental discount because we want to encourage them to. We wanted them to understand we understood the situation, but we encouraged them to, we believe in them, so believe in us, and we'll work together. And I think it worked out well. So in any kind of downturn, you need to really adjust accordingly.
And what has been the most challenging thing that you've obstacle that you've faced in your career thus far?
Most challenging thing in my career thus far that's been challenging. Gosh, these are tough questions. I mean, there's a lot of challenges. I mean, there's a constant challenge. I mean, I could identify 20 different things in particular. I can always reflect on what we could have done different or better. Um, but I'd rather not. I'd rather focus on what we can do better tomorrow and the day after that. What happened in the past is the past. It makes no difference as far as I'm concerned. Um, So what I will tell you is that mistakes that we made or the challenges we've had in the past, we'll grow from those and we'll learn from them. We won't make those, we won't do that again.
And what's a question that maybe you have for someone that's in a similar size or similar position with you? If you could ask someone that is maybe that next step or around the same place, what would you ask them?
What deals you have to sell me? No, I mean, ultimately, knowledge is key. And so it's imperative to always be working with your colleagues and learning about them. And I'm always intrigued with how people structure the business because there's so many different ways and so many successful ways of doing it. It's just intriguing. Whether you've got a syndication group with a lot of investors, or the guy's got a fund, or you got a family office, or somebody's just a wealthy individual looking to invest their deals. I mean, there's so many different avenues, and so you can take a little bit of all that and kind of put it into your own little way of doing things. I think that's really key. What would I ask somebody is, I think right now it's really coming down to sourcing deals and how they're underwriting. I think really that is key, is that trying not to project, but projecting the future, doing our best to see how we can underwrite for the future, because ultimately there's going to be some changes in how we do everything. And so I think that's really key.
And what are you doing?
As far as, I think that we're just being conservative as far as rental growth. I think that's first and foremost. I don't think that we're going to have the 5-7% annual increases we were having. I think that they're operationally we have to be prepared to do things more virtual than we have in the past. We've gone completely online on all payments, all work orders, as most places have, but a lot of places still don't. And just basically making sure that we are as resident friendly as possible in every aspect. I think that is key on the operational side. On the principal side, as far as growing, again, I'm just going to go back to the old metrics to just find the right deal. And so turning over every stone.
Speaking of knowledge, talk to me about mentors or any self-help books or anything that you've actually just read yourself that have helped you craft your skill today.
I like to read a lot of help-self books on occasion. There's a book called Leader's Coach. I think that's a great book. There's a book called First. Focus, Implement, Reflect, Seek, and Transfer. It's a book about every single day doing something small, just to improve self-development. Doesn't have to be tomorrow I'm going to buy 1,000 units. I'm talking about something small, whatever it may be. Get up 30 minutes earlier. It doesn't matter. Just one little thing a day to implement into your schedule. And if it works, implement it. If it doesn't, deflect it, move on. But that way you're constantly trying new things and always improving. And then, of course, I really personally get a lot of, I get a lot of knowledge from, and unfortunately we don't have conferences, but going to conferences, speaking with people, meeting with owners and doing all that good stuff. I really enjoy that. And I've spoken of, IMN, Multifamily Executive, all these different ones throughout, throughout the years. And it's just been a lot of fun, and meeting other owners and hearing their stories. It's a lot of fun.
Awesome. And what's the best way that somebody can reach you, John, if they have any other questions or they want to find out more about what you do and how they can get involved?
Yeah, just go to 180apt.com. My information's on there, and give us a call, and we'll gladly sit down with you and discuss it. My email is john at 180apt.alphapapatango.com. And that's the best way to reach me.
Awesome. Are you a military guy?
I'm not. Do I look like it?
No, you're using the phonetic alphabet. So usually,
I'm a pilot.
When people
I'm a pilot. So
okay, got it.
As a hobby, my obsession, not my profession. My obsession is aviation.
Got it. And I guess kind of the last question with that, do you see like an end point with this? Or are you just going to keep on growing until you die? Or do you feel like it's like, okay, now I'm going to, reap the benefits of my rewards?
It's an interesting question. It's a lot of people always talk about, you want to go retire and live on an island. I don't think I was built for that. I think I like to visit the island, but still come home. I think for me personally is leaving something to my kids. That is first and foremost, is to have something that, whether they want to get in the business or not, they have something to fall back on, and they're secure. So do I plan to get out of the business anytime soon? No. Absolutely not. It's too much fun. When it's not fun, then maybe I'll get out and then I'll become a full-time pilot. I don't know, but right now it's just it's a great time, and I think the real, like I said earlier, the objective for us, for me, is to have something to give my kids.
Awesome. Well, thank you so much, John, for taking the time to speak with us. And until next time, deal makers, talk to you later.
Thank you so much. I appreciate it, guys.
Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.